So African startups are finding themselves having to work smarter to access funding. And for a little bit more on this, I'm now joined by Octavius Phukubye, who's Managing Director at IDF Value Added Services and Included VC Fellow. Thanks for your time. And I know I probably butchered your surname. We've already discussed this. But let's start here. It seems like a curious case that African startups can go from a rainforest of funding over the last 2-3 years to now a drought. What is happening in the industry, and does South Africa have a different story to tell, or is it the same across the continent?
Yeah. Good evening, Ntokozo. Well, I mean, for 2022, I think given the scenarios that are happening all over the world, the economic downturn, the challenges, the difficulties, we've seen the war, the data that has come through now, Africa as a whole has raised over $4 billion, which is good compared to other markets, but also compared to the previous years and the rate at which we have been able to raise that. Although we didn't have or see like super mega deals that we've seen before, we've not seen many unicorns come in 2022, but I think for the continent, given the circumstances that are currently happening all over the world, we've done far better. And it shows that our startup ecosystem, our tech ecosystem is more resilient, is robust, and more investors are taking more interest in our space. As South Africa, compared to other regions, there's big fours. I think you've quoted a report. You've got Kenya, you've got Egypt, you've got Nigeria. Comparatively speaking, we've actually raised less than we've raised before. In the previous years, we've raised over $1 billion. This year, we've raised just about $600 million. That alone, I think, it's purely because of the macroeconomic factors. It's not really a signal that there aren't enough opportunities to invest in the country or in as it were. So I think. As it stands, 2022 alone, I think there's a recognition that it was hard. And to have reached close to $5 billion, US dollar fund VC raise is good enough. Going into 2023, we'll see how that happens. But for 2022, I think we've really done well as a continent, and specifically as a country, South Africa. Although compared to the previous years, we've not done well. I think we've really shown some great strides.
Now, you're saying that there is resilience, with African startups. I think for me, what was surprising is seeing that tech is no longer seen as that darling. But if you're saying they remain resilient, is it then tech companies or tech startups in South Africa and not necessarily in those other markets that are receiving venture capital that are perhaps struggling a little bit?
Well, I mean, the different countries that are really leading in raising VC, the likes of Nigeria, Egypt, Kenya, have really shown a significant amount of innovation. We've seen a growth in amazing fintech platforms that are coming from Nigeria, and few other verticals or categories that have really come to the fore. In South Africa alone, we also have seen, fintech, for example, taking a big portion of the VC that has been raised, about 37%. Or continentally, South Africa also is still a leading one, and then you've got agri-tech, health tech still showing up some few, and e-commerce as well in there. But I think for a lot of startups, it's not just South Africans that are more resilient. I think all of them are resilient. We've seen some signals. One, in South Africa alone, a lot of VC funds are raising from institutional investors. There's definitely trust and belief in the future of tech. So tech will continue to attract a lot of interest all over the continent. We've seen a few big tech companies setting up offices here. Microsoft, Google, they set up their dev centers in Kenya. We've seen some Google is setting up in Cape Town, that cloud region in Cape Town. So there is enough reason to believe that tech will continue to be an exciting opportunity. Corporate VC is also seeing some steady increase. So you've got your traditional corporate companies, investing in this asset class, taking an interest in financing some of their R&D, some of their innovation through venture capital. And that alone gives you some comfort that even in the immediate and future term, technology will continue to be an interesting and exciting investment. 5G, for example, infrastructure has been a big investment in there, and multiply that with the amount of mobile usage, that makes it, a lot of verticals, really exciting opportunities, health tech, fintech. So I think it's not going to end now. I think technology will continue to attract a lot of investment, especially software investment. VCs will continue to spend some money, although in a restricted form.
Now, OPU, on, understanding both sides of the coin when it comes to venture capital and where investors are looking to put their money. First part of the question, is there anything more that startups and entrepreneurs can do to really position themselves? Because as we heard earlier, Clive saying that it's not necessarily that the money is not there. The money is there.
Yeah.
But, the capital, the venture capitalists are looking for compelling, stories, compelling business cases.
Yeah.
What more could startups really do to position themselves in this year to be able to access this funding? But also just on the tail end of that question, where are the African investors?
Well, on the startup side, I think, typically what happens when there's a downturn in the market, a lot of investors hold back. They ask tougher questions. They take longer to sign checks. They are very strict or they are very tough in negotiating valuations. So for startups, I think they need to start being more realistic about their valuations. So when you go fundraise, you need to be really realistic about it. Two, you have to make sure that you are investment ready before you go out there, because the investors are going to now, in their due diligence, they're going to ask very tough questions. They're going to demand quite a few things. So as a startup, you want to build traction. You want to bootstrap before you go and reach out. So if you can do that, much better for you. You also have got to make sure that the products and the platforms that you're building are really solving real problems, and you can demonstrate that there is a validation for what you're building out there in the market. And because the investors are going to ask for that. On the side of the investors, I think the couple of things that are happening as we see, it's one, the investors, of course, are starting to ensure that their due diligence is a lot more deeper. Therefore, the fundraising on the side of startups is going to be longer, because there's a lot of questions that needs to be provided. But we're also seeing some alternative investment instruments that are being introduced to try and solve for the absence of quick signing of checks. So now, before, when the times are good, we sign checks quickly. Now times are bad, we hold back. So now there's venture debt, for example, that is now being introduced to provide bridging finance needs for startups. We're also seeing a few things that are institutional investors also putting money into some of these funds, allowing for the VCs to really sign checks, as opposed to really relying on your international investors. Yeah.
OP, I could go on all day with this discussion, but unfortunately we're out of time. That is where we're going to have to leave it for now.